1811 4000। यही कंज्यूमर हेल्पलाइन।
Namaskar and welcome to Late Edition. Tonight we're going to be discussing about how banks recover loans. Well, in the absence of guidelines, banks were using recovery agents who used means which were uncivilized in many respects. And in that, because of that, consumers raised a hue and cry, and they have been doing so for a long time. Finally, issues were raised in the courts. The courts have asked that guidelines be released. The RBI has come out with some guidelines and the government has become very strict. The finance minister said in parliament that banks will be hauled up if they use uncivilized means for recovering loans. Well, to discuss this important issue, we are with us in the studio, an eminent panel. We are joined by Jayanta Das, who is often with us here on Late Edition, well-known economic analyst. And we're also joined by Mr.Bejon Mishra, who is the Executive Director of Voice and a well-known consumer activist. Thanks very much, sir, for being with us. Before we start the discussion, let's look at this news package.
With stories of recovery agents harassing bank customers, the RBI has come up with the guidelines for streamlining the engagement of recovery agents. Banks which engage recovery agents who adopt abusive practices may be banned temporarily or permanently by the central bank. Each bank should have a mechanism whereby the borrower's grievances with regards to the recovery process can be addressed. The details of recovery agents engaged for the purpose, while forwarding default cases to the recovery agents with telephone numbers used by them. Banks are advised to use the forum of Lok Adalats for recovery of personal loans, credit card loans or housing loans with less than 10 lakh rupees and suggested by the Honorable Supreme Court. The regulator has sought suggestions and views on the issue within 1 month. Business Desk, DD News, New Delhi.
Well, Jayanto, in the absence of guidelines, what the banks were doing was it correct?
No, I mean, it's actually, if you look at it from the viewpoint of what the banks as an activity were doing was certainly all right in terms of trying to recover.
That's what they told
but the way the guys they were hiring, the way they were actually enacting, and actually without responsibility, number one. And number two, what happens is when you don't have an umbilical cord linked to the bank and you are just working on based of commissions on recoveries which you make, so obviously you use these sorts of means. And very sadly enough, and I am sure Bejon will also agree with me, over the last 5 years, the whole word of recovery agents are completely synonymous to lumpen elements who are there with muscle power out to take in money. So I think that's an extremely wrong message, and that's an extremely wrong community which has been in that sense nurtured and took birth in India just for the sake of recovering loans. I think we have to completely dissociate from the whole idea of recovery agents being those lumpen elements. We can have a professional recovery agency working as we have in the West, so there's no doubt on that.
A professional recovery agency, do you think that that's really possible? Do you foresee, because given the fact that, I mean, some of what the banks are saying is that, 90% of the loans that were defaulted were being brought back by these kind of recovery agents. But now with these kind of guidelines, they're not going to get back anything.
No, you see, you have to look at it as in terms of how the banks look at it as a business, you see. The banks looked at this, and especially when you saw that the banking sector was open to the private sector, and several private sectors came into the business. Prior to that, if you look at the scene, it was the public sector which had huge non-performing assets which they had to carry as a burden, which was actually a burden also to a common consumer who was using the banking service. But at the end of the day, the private banks, when they came in, their whole target was, how do you reach a common person to give them loan, because that's the business. That's the business model.
Right.
Now, most of the banks, you see, they become very, very proactive. Without looking at the credentials of the consumer, they were giving loans left and right. Whoever would want a loan, they just get it just on telephone.
Right.
I have seen loans getting processed just on telephone on your credit card. I mean, these were never done. You have to understand the credit worthiness of the consumer to whom you are offering. Now, consumer in that hype, because every consumer wants to have a good purchasing power, at the end of the day, especially in developing countries. So what we looked at is that the banks were so proactive that in order to sustain that, they had to resort to this kind of methods to recover, because you have to complete that cycle. See, when you give a loan, you need a repayment, and if anybody defaults, they don't look at who is the defaulter.
Right. So what you're saying then is the problem is with giving the loan itself. The bank should have been taking into some sort of due diligence. And now, of course, the government is saying that you should take due diligence into account when you're hiring recovery agents, but you should have done something before you gave the loan out to the person in the first place.
Yeah, there's no doubt, when you're into the business of credit, there will be an element of, uncertainty of whether the loan comes back, and all banks, all financial institutions work those sorts of things into the model.
Absolutely.
You can't work a model where you have 100% returning back of the credit, whatever you're offering. But in addition to that, as I said, outsourcing a body which actually has no linkages with a customer, no linkages during the delivery of the loan, all of a sudden comes in and it works completely on an ad hoc manner where it has an only interest of getting the loan back linked with some commission which will earn. They are just not part of that whole process itself. And in addition to that, they are completely unaware of what the promises the bank has gone ahead and made to the consumer, verbal as well as written. The consumer in most cases in India, and once again, given he is my consumer for decades now, would bail me out on this. Most cases consumers don't read the fine print, and that's everywhere. It's just not a fact only in India, it's everywhere. And those sorts of facts also have come in. And in such a situation, you have an external agency with musclemen in who are just coming in, and they're not even ready to listen to what sort of contractual obligations both the parties, the bank as well as the consumer, had, and they're just only interested.
But isn't the consumer at fault then if he's not read the fine print?
Well, of course he is. I mean, it goes without saying that you have to know what you're signing on.
Right.
But most of the time the consumer won't do that, because they take it for granted that the relationship is so good, and as they're going to pay it off, they don't look at the nitty-gritties. You see, every consumer, when they take a loan, they don't take it not to pay, but they take it to pay. Now, coming to your earlier question, you see, whether professional, the whole premise of recovery agent was on the wrong premise. It should have been, the bank should have recruited people with skills of counseling. That means if a customer defaults, you need a person who would not abuse, but will counsel that consumer to be able to get back their repayment. You see, but instead what the banks did was they recruited the wrong kind of people with wrong skills.
Okay. So we'll discuss what kind of skills are required for recovery agents. We're going to take a short break. Do stay with us. You're watching Late Edition. Right, Ms. Mishra, you were talking about agents who have certain counseling skills, but to what extent can a recovery agent go? I mean, ultimately his aim is to get the money back for the bank.
Yeah, again, I'll not start on a premise of recovery. I'll not use the word recovery. I'll use the word enabling. You see, the enabling agents. You see, what I would say is, when a person is not able to pay, a consumer is not able to pay, there's distinction between two categories of consumers. One is a category of people who are very small in percentage, who genuinely do not want to pay, and they want to get into the legal route not to pay. You see, and there are a set of consumers, which is the majority of the consumers, who want to pay, but due to certain circumstances, they are unable to pay at that point of time.
Right.
You see, so we need to understand that, and that relationship is very critical between the bank and the customer.
Jayanta, do you think that the bank doesn't understand this relationship, that they go all out, if a person has defaulted on one of his payments, they send in these people and, try and harass the life out of the consumer?
Well, I think the problem actually lies with the fact that the relationship somewhere down the line is, I won't say not to understand, they certainly understand where business lies, there's money, and where money is there's also a risk element involved. But what they don't understand is the way to actually go about it, that's a very important criteria which we have to learn. Also, the fact which I have seen is, if you see the boom in consumer spending which actually happened over the last 8 to 10 years, most of the banks, and when they have all started focusing on the retail sector, and they've seen there's a huge amount of money to be made over there, what they have done is immediately, apart from expanding the core activities of the bank, say for example a bank A, which apart from hiring, what they have done is they have outsourced agents to give this credit. So what happens is, right from the start there is a default credit limit which happens, because these outsourced agents, if they allow those credit to flow, they have some amount of commission to share. And then when this credits fail somewhere down the line, they once again outsource agents to recover this credit. So somewhere along the line, I believe this is not the way actually banks should work. It's fine you do outsourcing, worldwide people do outsourcing in terms of reducing costs and things like that, also reducing some of the core activities and focus of the bank. But also, I think critical important part, which I guess I would comment on later when you can bring up the RBI draft regulations for discussion. I believe it's completely important, at least the part of recovery and which Bejon tried to focus on in terms of counseling and enabling rather than just hardcore recovery. There should be a hardcore bank person involved, and not just a an outsourcing agency which is listed somewhere and has some sort of regulatory authority to do so. I think it's very important for the government or for the regulatory authorities to define, to have a core cell which completely involves people or who are employees of the bank. So at least in that case they have a very, very high responsibility of following through whatever promises has been made to the consumer.
Okay. Now the banks have some sort of self-regulation system that they are planning to bring in, because that I think is a bill that has been passed by Parliament recently. The National Payment Corporation of India would be established under this. Banks would automatically have their own people on board. They'll be looking at this quite seriously. Do you think that they would frame better guidelines? Right now the guidelines are very vague, broad. They ask that recovery agents be trained on a one-year certificate. Things that basically, things are a little vague as things stand.
You see, as a consumer activist, I would always encourage in terms of ensuring that the provider does lots of, takes a lot of initiative to be pro-consumer on their own rather than being driven by regulations.
Okay.
And I personally do not ever believe that regulations would always bring a change.
Okay.
What brings a change is your commitment or your degree of demonstrating your commitment towards the customer. And that is why you will always see the organizations who are doing well and who are actually at always a kind of a growing spree are those organizations who are pro-consumer, who always have internal guidelines and regulations which guide their team to become extremely pro-consumer and consumer friendly.
Okay.
And that's the bottom line.
So the consumer can be king here in the loan market as well. Do you think that that's possible?
It is. There's no doubt on that. The only thing is there are some cases where they are on the receiving end. I mean, if you just remove that, in the retail sector, it's actually the consumer is still the king, because there are a host of banks which are offering them all sorts of freebies, all sorts of rate discounts, all sorts of amounts and all. I mean, as Bejon was telling, with a credit card you can get a loan, outright loan. So all those things, there's no doubt. In this business, the consumer still remains the king. But the problem comes in is, when the
Let's
default.
look at the recovery agents themselves who are currently in practice. Many of them use uncivilized methods, is what people say. Now, if a bank is to do due diligence about a recovery agent, they will look at, what will they look at? They will say that he's delivering 90% of what I ask him to do. He's a good recovery agent. And then they will, somebody will ask whether, have you got any complaints? They'll say, no, we have no complaints, because he gets 90% of what we ask him to do. But at the same time, the methods used are not talked about.
Exactly.
So at the end of the day, I mean, what would a recovery agent, how will the bank look at a recovery agent? They're not going to be bothered about this counseling business and things like that. They want their money back, obviously.
Everyone wants their money back, whoever has learned in the market. But what's critically important is if you start the whole premise at looking at just numbers, then there's no solution anywhere. I mean, if you just ask a person, I want X amount of money in the next 1 month to be recovered from whatever market we give you to recover from, then obviously the whole plan fails there itself. But the whole question is, we are in a civilized society. We are in a society where affirmative action, which Bejon was trying to focus on, is required, is very essential. And we are also in a society where institutions like banks, financial institutions are lending out money to a consumer sort of a group who are further acquiring things. So these are all interrelated things. You can't look at a stray case of or an isolated case of a group of people trying to fix up a target, working on behalf of a bank, and that's the end of it. I don't think it's a very wrong premise.
One recovery agent who was practicing both before and after the guidelines has said that his recoveries have fallen to 40%. I mean, of what he used to recover earlier because of these guidelines. He's very unhappy, obviously, with the guidelines. What would you say to him?
He has to recruit the right kind of people. He always recruited people who had criminal background, who knew how to get money out through threatening methods. And it's just like, you hire a bunch of gundas to do certain activities,
Right.
and then you just look at those numbers. No, it's not that. I mean, you can, I would not classify them into civilized and uncivilized. I'll classify them as professional and unprofessional.
Okay.
Ethical or non-ethical, you see. So what I would look at is that how these organizations who have been hired or outsourced to recover money use a kind of a process which is professional, which means that they get people who know how to talk,
Okay.
they know how to deal, and they at the same time get that number right in terms of getting that money out
Right.
from the customer.
We'll talk more about this professional approach after this break. Stay with us. There's already a redressal system, I mean, for consumers. The banks have done enough. I mean, some would say they've done enough. They have an ombudsman in place. There are several courts. There's the legal recourse already. Why should the consumer be afraid of musclemen and things like that when they have these the legal recourse already in place?
Well, the first problem is, the information flow is not as clear and transparent. We all know there are ombudsmen available. We all know there are, various sorts of areas available around. But the unfortunate part is we just don't know when to go and where to go and how to go about it. There has been blatant cases of, persons who are defaulting on the first time, say if there's a person who is on a 60-month EMI, on the 45th month if he is defaulting on one single EMI, before he even realizes that there are people who are coming out snatching away his car or his two-wheeler, there are calls which have to be made. Just before this break, when we are discussing about a person who's lost business and is at 40%, I look at it in this way: he is very fortunate enough. The criminal prosecution system in this country is quite slow. If that would have been very efficient, he would have been happy that his business is 40% rather than having 20 FIRs lodged on him by various consumers. Okay. So I look at it from that point of view. And I also believe that rather than just looking at it in terms of falling business, he should also focus on the fact that if I do a business in a proper manner, in a likable, civilized manner, my businesses can also grow. It need not be just staying at 40%, but then it can also be a harmonious relation in terms of a consumer and a bank and enabler over here. I'm using a Bejon's word over here, So that's the way I look at it.
Do you think this enabling system actually will function in the end? Because given the nature of our society as it has survived for some time, we have money and muscle power that rule the roost in various sectors, and they tend to sort of dictate terms, even perhaps to banks. I mean, they would probably tell them that we would help you out. They would the muscle power could be working against the bank itself. So how do you deal with a situation like this?
You see, 10 years back,
and they may be having political patronage.
That's exactly what I'm saying. You see, earlier I would say that was the scenario which was existing. But today, it's completely changing in terms of there's a more purchasing power with the consumer. He can pay back. There's a lot of business. There's a lot of opportunity. It's all how you want to encash that opportunity. And what we in the consumer organization is constantly looking at is that how do we make banks realize this and reach out, you see, and make a product or deliver a service which is of high quality. Okay. And we are always trying to benchmark, in terms of trying to understand who is where and who is doing well and who is not doing well. And if somebody is doing well, what are the reasons behind that bank doing well? So, can we all look at that? And the key factor is, let me tell you, is the internal mechanism of redressal within the bank has to be very robust.
Okay.
And it has to be very friendly, which is not, unfortunately. Even the big brands who are working in our country today, who are global,
right,
they are having double standard in terms of practices. Okay. They're doing something else in their own country, but when it comes to India, they are adopting some age-old method, which is not a good practice. So we need to, expose those, kind of bad practices, in terms of at the marketplace. And the regulator has to be very sure that when they come out with a guideline, they not only monitor, they penalize severely on people who do not follow it.
Right. Do you think that it's possible, to have a relationship, a banking relationship with the customer that, at the end of the day, we don't even really require a recovery agent because it's a harmonious, beautiful relationship? Do you think that can actually be achieved here? And the redressal system, as we were talking about earlier, is robust and it's functioning?
We certainly can have, and that's what I said is very important, rather than have an outsourced agent which has got no umbilical cord linked to any sort of the institution.
You are against the outsourcing of, or
to a great extent, yes.
Yeah.
To a great extent, yes. I strongly believe the bank should have.
But
an
what if they have
department.
a civilized approach, and they have
That's what I
done
said.
these
That's
courses,
what I said, you know.
and they have, let's say, it's a specialized.
It's a best
system.
case scenario.
Yeah,
I mean,
a best case
I was
scenario.
once this RBI draft guidelines were issued. I heard consumers who were telling you who would actually listen when a recovery agent is calling me on the phone. I mean, he's supposed to speak well, but I can't record him when he's not speaking well, you know. So those sorts of, you know, inhibitions will still keep on coming. And as I said, anyone who is an employee or anyone who is an outsource agent, there will be quite a difference, actually, I believe, in terms of how you're behaving with a customer who is an important link to the bank's business.
Right. So what the RBI's do's and don'ts say is that the borrowers will be given the telephone numbers and other details of the recovery agents, and some customers believe that what difference is this going to be, because at the end of the day, I mean, even if I know the number of this guy and I know who he is, the methods that he's going to use and the way he talks to me are not being monitored.
Yeah, absolutely. And then, you know, what we also need to understand is how do you create these evidences. You see, because what we need to understand is that we shouldn't be able to get to that place where you need to give an evidence.
Okay.
You know, it should be so much seamless, the whole activity, that the banks and the customer should be able to say, wow, this is what we wanted, and this is how they have dealt with me. See, as I'm all the time telling you, if there's a default by a customer, it is not intentional most of the time.
Okay. Do you think that this whole concept of recovery agents, you were saying that you're against it from being outsourced, you don't want it to be outsourced. Do you think that that should be part of the marketing wing of the bank itself? I mean, that it should actually be part of their own strategy.
That's part of the initial argument. A person who is actually doling out those loans, he is the nicest guy in town, I guess, when he comes for a loan in and tells you that, look, these are the facilities which we have. And this. So, you know, if the same group is also used for recovering these sorts of loans and all, in a manner, broader manner, obviously I think there will be a sea change in at least one knows. Even in simple cases like credit cards, Mark, you know there are cases where, you know, if you default on some stupid interest payments which they have wrongly claimed, your name is put in civil, which is one of these Credit Information Bureau services. So this is unfair, completely unfair.
But isn't that already happening? I mean, the people who give the loans, aren't they obviously calling up to find out whether, you know, the recovery is coming in?
You see, they are doing it, as we all know, they are doing it. But they're not doing it well, you know, and that's the issue. You see, what we are looking at is that how do we bring in those best practices? And what constantly we are telling the banks is that, you know, you have to give the highest quality of service at the most affordable price. Now, how do you make it happen? Like of course, I agree, not agree with Jonathan in the sense, you outsource when you outsource. You outsource when you get the best kind of a deal. See? But if your internal people are able to deliver that at the least cost, then you don't need to outsource.
Okay. We'll continue this discussion. Keep watching. You're watching Late Edition. We are discussing loan recoveries. So, Jayanta, do you believe that the regulator, I mean, there should be a regulator at all in the first place? I mean, if you assume that everything functions properly, then you don't really need a regulator. But the regulator needs to be there to see that, I mean, so that things can function properly.
Yes, certainly. There
what should be the constituents of this regulator? How should it just be the RBI? I mean, it's already there.
RBI has played a critical role in terms of at least enabling a draft guideline and focusing or asking for public opinion on that. I think that's an important first step which has happened, and this is actually a whole learning process, because I'm sure once even all the things which are there in the draft guidelines they're implemented in toto, there will be other loophole areas where cases will come up. So it's actually a learning process and an implementing process which keeps on changing in terms of requirement. But what is very essential is the relationship and the way and the process in terms of behavior and muscle power and all. I think those sorts of things to some extent would certainly get eliminated or reduced. And I don't think we'll have a blatant, I mean, in most cases now, Mark, I mean, if there is a recovery agent who comes out on the door and knocks, you just don't know what to do. Should you call the police for his misbehavior? Should you call the bank? Because the bank in most cases is not available in those cases. And unfortunately, is the recovery agent at his door who will make you talk to his own boss and tell him, if you have any problems, why don't you talk to him and sort it out? Who is blissfully unaware of what you have taken, how you are taken, what are the conditions on which you are taken, and whether the bank is charging you in the right manner or wrong manner. So those sorts of things I think has to also be ironed out, in addition to just training and the way they should behave and code of conduct and things like that.
So do you think that banks will be able to, you know, I mean, right now there are still defaults, but using these so-called best practices, will they be able to achieve what they are doing?
100%. I'm absolutely convinced. You see, what is our biggest anxiety, and which we keep telling the policymakers all the time, is that before you open up a business, you must first have the regulator in place. You must have these guidelines in place, because it's not fair that you allow somebody to do business, you know, just free, you know, I mean, without any kind of a regulation or a guideline.
Right. In fact, that's what ICICI Bank's counsel told the Supreme Court. He said that please give us the guidelines.
That's right. You see, so what I would do is that as a regulator, RBI, what they need to do is they need to bring guidelines on several issues, not only this. And today, this whole financial sector is growing to that kind of a percentage where I think if these guidelines don't come in place at the right time, then we can see several more calamities coming for the consumer. This is just one of the few, you know, which we have seen today.
Okay.
You see?
So, Jayanta, you said that this is an evolving process, but when do you think that, you know, I mean, we would have clear-cut guidelines and rules in place and sort of laws in place that, you know, ultimately the consumer feels, okay, this I won't be harassed by a recovery agent who is using muscle power?
Well, I believe, you know, the financial policy reforms in this country has been pretty fast. They had wonderful achievements in all sectors, not just, you know, consumer loan, but in terms of investment in markets, stock market information, things like that. It's an evolving process, you have rightly said so. What's important is over the last 5-6 years, the boom in consumer spending which has happened has actually brought in these new sorts of problems, and these problems have to be dealt in those new technological manners and new improved manners through the regulator. And it will take time. So what's important is if, you know, I guess in the next couple of years, some laws are properly put into place, at least these recovery agents, these recovery houses, and they come back, fall back in proper shape. Their linkages with the banks and their responsibilities with the banks also are properly established. Right. And then I guess we can foresee.
As a consumer activist, are you optimistic about, you know, loan consumers?
Yes, absolutely. I'm absolutely, you know, sure that the customers are ready. It is now up to the bank and the policymakers. How do they delight that customer?
Okay, we'll have to leave it there, gentlemen. Thank you very much for joining us on Late Edition. Thank you for watching. Namaskar.